Okay, thanks, Kevin. I hope everybody can see the screen. Uh, so I'll start by saying that 2020 has been a very volatile year for LNG industry. We saw spot LNG prices reaching historic lows towards the start of the year, and there has been a significant jump towards the end of the year, especially for winter deliveries. At the same time, we also saw some historic lows being quoted on long-term contracts that were recently signed. What I'll try to do over the next 15 or 20 minutes is share our outlook on how we see the industry going forward and what does that mean, especially for emerging buyers like Bangladesh. Before I go into the presentation, let me thank Onsite Group for giving Wood Mackenzie an opportunity to present our thoughts in this virtual session. A quick primer on us. Many of you are aware of us. I mean, we are one of the leading research and consulting firms in the energy sector, and we have a coverage across all the energy commodities, be it coal, oil, gas, LNG, chemicals, metals, and minings. Specifically with respect to LNG, which is the topic of the day, we do have a global perspective on the entire value chain. That's because we track not only the upstream supply assets that feed into the liquefaction plants, we also track the shipping fleet that is used to trade the molecules, the regasification terminals that are built in various import markets, as well as the companies that are involved in various elements of the value chain. My name is Mangesh, and I sit in the consulting team of Wood Mackenzie, where we are involved in delivering bespoke advisory engagements for our clients. Typically, we split these engagements into three offerings. The first is what we call business strategy, where we are involved in designing strategies for upstream clients, or we may be involved in advising regulators on energy policy and regulation related matters. The second bucket is what we call project development, where we are effectively involved in feasibility of projects as well as reviewing commercial agreements that underpin project financing on a number of those assets. The last segment is what we call due diligence, where we are involved as an advisor on the buy or the sell side for several projects. Before I go into the forecast that we have for this decade, I just wanted to give a quick primer about 2020 because as I said towards the start, it was certainly a very volatile year for the LNG industry. If we look at what happened towards the start of the year, when the pandemic was spreading in various Asian countries and lockdowns were being imposed, we saw that demand actually plummeted and spot LNG prices reached historic lows, with some of the trade deals being done as low as less than $2 per MMBTU. The second half of the year has been slightly different. What we witnessed beginning August, in fact, was that the winter delivery prices actually went above long-term prices and were being traded around $7 per MMBTU. A couple of factors which went on to support this. One, we did see supply from a number of liquefaction projects like Gorgon, Prelude, or some supply from US projects like Cheniere getting impacted when there were harsh weather conditions, hurricanes in the US. And second was also that the aspirations for higher winter demand meant that buyers were ready to quote higher prices when it came to those winter deliveries. So that's a big jump that we have seen in pricing towards the start of the year and then the latter part of the year. Another notable feature of this year has been the resilience of LNG demand. When we saw the pandemic impacting demand towards the start of the year, a key question for many stakeholders was how much demand destruction are we going to witness? How much low will be the demand in this post-COVID 2020 world as opposed to what we had in the pre-COVID world in 2019? And there were various projections around 5-10% lower growth. Come to December 2020, what we are actually seeing is we might actually still see a positive growth in LNG trade. Our latest forecast is that we will still see a 3% growth in LNG trade between 2019 and 2020. And this has again been supported by a number of factors. Given that the spot prices were lower for the first half of the year, and also into like the third quarter, we did see majority of the countries trying to take advantage of that spot prices. And if you look at how they reacted to those things, China reduced their pipeline import nominations to take advantage of the spot lower prices. In India, we saw that domestic developments, which were to be commissioned in Q2 of the year, have actually been delayed, and that has made more space for spot LNG imports to go into the market. Similarly, in several other countries like Korea, etc., we have seen an increasing share of gas in power generation given the competitive prices. So all this has meant that LNG demand has shown resilience, and we will in fact see a growth in LNG trade even in 2020, in spite of what the earlier projections were towards the start of this year, when people thought that we will see a heavy demand destruction happening. So what's going to happen going forward? If you see the chart that I have there, I purposely did it from 2015 because I wanted to show how much the LNG industry has actually grown over the last 5 years. Between 2015 and 2020, the absolute growth in global LNG demand has been around 115 million tons. And just out of curiosity, when I tried to look back into the past and to see how much time did it take in the past for demand to grow around that 115 million tons, it was actually a period of 10 years. So the absolute demand growth that was seen in the industry during 2005 to 2015 was actually seen quickly during 2015 to 20. So that certainly shows that there are a lot of factors which are supporting the penetration of gas and supporting the demand for LNG, including the growth in LNG supply that we witnessed from several liquefaction projects during those years. And that has meant that there has been a significant jump in LNG consumption over the last 5 years. If we look at what's happening going forward, we expect that growth to continue because especially in power generation, we do see favorable policies now coming from a number of countries, with coal plants being almost banned in several of those. And in order to meet that incremental demand that's happening, a lot of these countries will need to rely on gas-based power generation. Also, in the industrial sector, we are clearly seeing cleaner policies driving the usage of gas in that sector. This means that the healthy growth of LNG demand should continue going forward. And over the next 10-year period, we expect demand to grow at a CAGR of 4% per annum, with volumes jumping from around 370 million tons in 2020 to around 560 million tons by the end of the decade. One thing to note about the growth in this demand is a lot of this is going to come from the emerging countries. So historically, the growth was driven by your JKT in the past, as well as China and India leading the numbers in the Middle East. Whilst China and India will still continue to grow, and we will see LNG demand increasing in these two countries, we will also see imports increasingly happening into the Southeast Asian and the South Asian markets. And if you look at some of the numbers that I've thrown here, for Southeast Asia, collectively, they will account for more than 10% of the global LNG demand by 2030. And if you look at that absolute growth, around 25% of that growth almost comes from the Southeast Asian markets. Also, South Asian countries will play a critical role. And I've excluded India when we have shown the numbers here. But if we just include the existing importers like Pakistan, Bangladesh, as well as some of the new importers like Sri Lanka, which are expected to join the LNG importers club going forward, their demand collectively is expected to jump more than threefold during this decade, increasing to around 40 million tons by 2030. So that's the demand side of the story, which clearly shows that there's a healthy demand expected to continue in the space of LNG, given favorable policies, given competitive prices that we are currently seeing in the market. Now let's look a bit at the supply side of the story. Again, the big jump in LNG consumption that we saw during 2015 to 20 was facilitated by the FIDs that happened on these projects during 2010 to 2014. So a lot of these were FIDs on projects in Australia like Ichthys, Wheatstone, which have already commissioned, or the first wave of US LNG projects like Sabine Pass, Freeport, Cameroon, which again have already commissioned LNG exports by today. But all these FIDs that were done in 2010 to 2014 meant that supply increased significantly during that 2016 to 20 period. And that facilitated that growth in that 115 million ton growth in LNG demand that we spoke about on the previous slide. However, post 2015, what we can see that there was a clear decline in FIDs that have happened. And this means that we will certainly see supply over the next 3 to 4 years being impacted. What I mean by that is we are not going to see a significant growth in supply over the next 3 to 4 years because the FIDs that happened between that 2015 to 2017-18 period were limited. And those are the projects that are actually going to commission over the next 3 to 4 years. 2019 was a bit different. I mean, in 2019, there were concerns among the stakeholders that the market may tighten again post 2022-2023. The buyers were willing to support new liquefaction projects. And we saw a record number of FIDs actually happening in 2019 with 70 plus million ton taking FID. These were projects again in Russia, Mozambique, US Gulf Coast, etc., which will commission towards the middle part of the next decade. Given the impact of COVID, the lower oil prices, again, where we are in 2020 is a very challenging environment for new FIDs to happen. The only FID that has got announced till date this year is the small 3.25 million ton Costa Azul project by Sempra. Having said that, what we can clearly see is that though a FID has not been announced officially, work is clearly progressing on the 32 million ton expansion that Qatar is targeting for their first phase. They obviously are talking of a much higher number than that 32 million ton. But in the first phase, the 32 million ton expansion is being targeted. And though an FID has not been announced, we see work progressing on the upstream side. There's clearly work progressing on ordering shipping fleet, etc., which clearly means that there is a high likelihood that we will see Qatar taking an FID shortly. And that will mean that there's a high likelihood of that 32 million ton expansion going ahead and those volumes being available by the middle of the coming decade. So what does this mean in terms of the overall supply demand story? What we have done here is overlaid the global LNG demand projections on supply from operational and under construction projects. And what you can clearly see here is that based on projects that have already taken an FID, the market appears to be well balanced and well supplied until at least 2025. Gap starts opening up post that. But if we take into account the 32 million ton expansion that Qatar is targeting and which we think is a higher probability for going ahead, then that would effectively mean that we will have more volumes coming in that blue, dark blue area chart that we are seeing there, which is the under construction volumes. And that effectively will mean that the market will be well supplied until around 2027, 2028. So this clearly suggests that supply availability no longer seems to be an issue for a major part of this decade, because we do have ample supply coming from projects that have already taken FID. We do see the Qatar expansion going ahead, which will put in more volumes into the market. And along with that, there are a number of other projects which are targeting FID and which are talking to potential buyers for signing SPAs that can underpin financing for those projects. So what all this supply demand balance story is doing is effectively it is creating intense competition for marketing LNG volumes, and that has been pushing down the oil indexation slopes on LNG SPAs. During 2011-12, especially when the unfortunate Fukushima incident happened, we saw that LNG demand increased significantly, especially in Japan, as well as it was increasing in other regions in Asia. And that meant that the oil indexation slopes on long-term contracts were as high as 14.5 to 15%. Whereas clearly we have seen those oil indexation levels going down. By 2017, we were seeing those average levels at around 11.3%. As I indicated earlier, by 2018-19, what had happened is that the stakeholders were starting to contemplate whether the market would actually tighten post 2022-2023, and that did help the prices to flip a bit for a certain period, and we did see 2018 average prices rise again. But the record number of FIDs that we saw in 2019, and then the demand plummeting now in 2020, has overall meant that the expectations of suppliers on long-term oil indexation has also gone down. If we look at some of the recent contracts that have been announced, the slopes on those contracts are as low as around 10.1, 10.2% indexation. Another thing to note is it's not only about the pricing element. In a LNG SPA, there are several other non-price elements that get negotiated, and we are seeing the sellers making concessions on a number of these non-price elements as well. The flexibility in terms of destination restrictions or volume flexibilities on account of the downward and the upward quantity tolerances, or the payment terms and the credit security mechanics that get negotiated in LNG SPAs today are a bit different than what we had seen historically. And we clearly see that sellers are willing to make concessions on both the price as well as the non-price elements, because clearly it's getting documented that the market is in favor of the buyers. There's intense competition amongst all the sellers to contract volumes with end users, and that effectively is putting a pressure on the sellers to offer more flexible terms on price as well as non-price terms. Let me then bring a quick snapshot about the Bangladesh market. As I said earlier, we expect South Asian countries like Pakistan, Bangladesh also to be importing LNG in a larger scale than what they do today by the end of this decade. Both Pakistan and Bangladesh are expected to be around 20 million ton markets in our view by the end of this decade. If we then look at the regas capacity, because that will certainly be important if the stakeholders in Bangladesh were to try and take advantage of this favorable market environment, because in the absence of that regas capacity, they aren't going to be able to import that LNG. And in the chart here, what we have done is we have overlaid our projections for LNG demand in Bangladesh against the regas capacity. So today you have around 7.6 million tons of regas capacity in the market coming from the two FSRU projects that commissioned in 2018 and 2019. However, the Matarbari project has seen slight delays. And what we did here in the morning sessions was that a tender on the Matarbari project is expected to come out either this year or next year. But land-based terminals, as many of you are aware, do take around 3 to 4 years for construction from FID. And that clearly means that the earliest we may see the Matarbari terminal commissioning is going to be somewhere around that 2025-2026 period. So that clearly does raise a concern that could the country actually fall short of regas capacity, especially in this 2023 to 2024 period. And could actually another FSRU be the only option that may need to be considered, because it may be very difficult for a land-based LNG terminal to really come up in this 2023-2024 period, given that no FID has happened yet and construction has not started. So that clearly in our view is something to think about, that regas capacity aspect will need to be considered. And though we have seen statements in the media from Bangladesh stakeholders at times that they don't want to consider a FSRU, we wonder if there will be a need to consider another FSRU, especially in this 2023-2024 period, when regas capacity may fall short of demand. Going forward, even if we account for the 7.5 million ton Matarbari terminal to get constructed, that still would mean that if Woodmac's projections on Bangladesh LNG demand are right, which means that the demand reaches closer to around 20 million tons by the end of this decade, that means that there's still potential for more regas terminals to get built. So clearly, in a nutshell, what we would say is that the market environment in terms of global LNG industry is clearly favorable from a buyer's perspective today. This is an opportune time for the Bangladesh stakeholders to negotiate better terms, both on the pricing as well as the non-pricing aspects of an LNG SPA. And given the projections for growth in LNG demand, which means that more LNG will need to be contracted, what the stakeholders will need to consider is there adequate regas capacity in the market that can facilitate these projections for LNG imports to happen. So I think that's the end of the time. I'm just leaving my contact details here, just in case if you are willing to reach out on any questions that you may have. I can take some of the questions right now, but given the constraints of time, we may not be able to take all the questions. But happy for you to reach out to me directly, and happy to answer some of the questions that you may have.
We have a question from Michael Joseph, Mr. Michael Joseph. Can you hear me?
Yep, sure, Kevin, I can hear you.
So he asked that with hydrogen gas coming in, what impact would that have on LNG in the coming years?
Okay, no, I think good question. No, I mean, see, technological disruptions definitely are coming, and the pace of change has changed, which means some of them are coming faster than what we thought some years back. Having said that, what we still need to note is that, I mean, there are obviously various ways of producing hydrogen. I mean, you also produce hydrogen from gas. So one of the ways for producing that hydrogen is going to be gas, which means that you may still need some gas and LNG for that. And I appreciate that there could be non-fossil fuel ways of producing that hydrogen, which is effectively produce green hydrogen from electricity or other sources. That will act as a competition. But our view is that given the maturity of the industry at this stage, we don't really see that as a big impact, especially over the next 4 to 5 years, because it will take time for the industry to mature and start producing on a big scale. And hence that impact in our view is really a post 2030 impact. Prior to 2030, we think that there are less choices available for the industry to decarbonize other than using gas and LNG, just because of the fact that we are at a nascent stage on some of these new technologies. Or if we speak about renewables as such, then the scale of renewables that may need to be created to meet that demand would make it very difficult for renewables to take a complete market share of that incremental demand growth that we are expecting.
Okay. There's another question from Lalisa Selam. She asked, could you shed some light on Henry Hub versus Brent linked pricing competition in the near future?
Okay. I would say, I think a very good question. I mean, we do get quizzed about this by several clients whom we are advising. And to be honest, our answer is that nobody knows what exactly is going to happen with commodity prices and how they are going to behave over a period of 15 to 20 years, because that's the period that you are looking for when you sign a long-term contract. So in such a case, our view has always been that given Asian markets are characterized by oil, given you do have oil product fired power plants, as well as it going into industrial sector in many parts of this region still, you can stay focused on oil linked for a predominant portion of your requirement, but there is no harm in getting diversification and avoiding putting all your eggs in some basket and taking some exposure to Henry Hub indexed LNG. Now, how much portion of oil indexed and Henry Hub indexed LNG you should buy clearly depends on a case by case basis and what are your view on commodity prices, etc. But in a nutshell, what I will say is in answering that question, it's difficult to pick up a winner from here. So it's good to diversify your basket, have exposure to both the indices, because it is likely that one contract is going to be competitive at certain periods of time, whereas the other contract may be competitive at certain other periods of time. So in a nutshell, it makes sense to have a mix of Brent and Henry Hub indexation in your portfolio rather than trying to pick up a winner, which means that there could be a risk of you being completely out of the market if you just choose to stick with one indexation.
So there's another question because we still have time. So can we go on?
Sure.
So there's another question from Mr. Abhijit, who said, he asked, what is the reason you see the natural gas for power generation has not taken momentum in India geographical area? What are the policy changes you would suggest for this use to happen?
Okay, I mean, again, good question. I mean, if you look at the mix of sectors that consume gas in India, obviously power has been towards the lower side. There's a lot of idle capacity in India actually, which is connected to infrastructure, which can suck up volumes. I mean, the key challenge in India has been about pricing, because it has always been seen as a competition against coal, and where LNG prices have been historically, except for a few instances, we have seen that it is very difficult for LNG to compete against coal. And now, if we look at some of the tenders that are being announced on the renewable side, then you can conclude as well that it's very difficult for LNG to compete against some of those tariffs that we are seeing on the renewables tenders. As a policy change, I mean, it's clearly a drive from the government for using cleaner fuels. I think that's what we need to see. Till date, we have seen that there have been several agreements signed, and clearly the government has announced their intentions to increase the share of gas in the overall mix. But ultimately, if we look at what has happened on the ground, we can clearly see that a lot of coal projects have actually gone ahead and got built, and that has just made it difficult for gas or LNG to penetrate into the power sector, especially. So if there has to be a growth in gas or LNG demand in the power sector, there has to be a recognition very clearly that we need to use cleaner fuels in order to stop the environment polluting that's happening in the country, and that would effectively help penetration of gas LNG to the power sector.
Okay. So I think another question, and is that okay? I go on with this.
Sure.
Okay, so the question is, what is the basis for your LNG demand projection for Bangladesh market? This country will get power from large coal and nuclear power plants. It's about 10, I think 1 gigawatt capacity.
Okay, no, I think again a good question. I mean, see, so when we look at the overall power demand growth and how it will be met, our view obviously is that it will need to come from a mix of fuels. Yes, we are seeing coal plants being constructed currently, which will commission over the coming years. There's nuclear plant which is being commissioned again, which will be operational next decade. But the reality of the day is that coal financing is just getting difficult day by day. We have seen that a lot of financial institutions have backed out of from coal. A lot of the independent power utilities, say like the Japanese, etc., have also now clearly announced their intentions to walk away from coal. That would clearly mean that post the current cycle of coal projects that you have, which is already sanctioned, which is already under construction, it is going to be extremely challenging to build new coal plants anywhere. It's not only Bangladesh; it applies to almost every country, I'll say, and also in Southeast Asia, where we are seeing the same challenges happening. And that would just mean that it's going to be difficult to have more and more coal plants coming to meet the incremental power demand that you're seeing in these countries. And as I said earlier, though renewables will come up in a big scale, we think that you would require a massive renewable investment creation happening if you were to meet that entire incremental demand through renewables. We think that's just going to be difficult, and for that reason, gas LNG is in a very good position right now, because you can build large scale baseload plants that can run on gas. And that's the primary reason why we see gas demand increasing into the power sector, not only in Bangladesh, but also in several countries in Southeast Asia.
I think we got many questions, but it depends on you. And we have like two or three more questions. So, do you want me to go on or just select one?
Okay.
Uh, this one is from Mr. Smitesh, and he asked, "Do you see merits in private players procuring LNG in Bangladesh as opposed to public procurement?"
Okay, no, I think very good question. I think, see, I mean, ultimately, what we would say is that a proper framework will need to be worked out. What happens today is Petrobangla imports LNG, and that is then supplied to end users at a pooled price. So, no end user is paying the market price for LNG that is being imported from the international market. Petrobangla is doing a weighted average of their domestic and LNG costs, and a pooled price is being offered to end users. If you were to have private players coming in and procuring LNG, the first thing that will need to be sorted out is, can they really compete against those pooled prices? And which is obviously going to be very difficult, because the pooled price will always have a component of those lower cost domestic gas sources. So a proper framework will need to be laid down there to make private participation possible, if that is what the intention of the government is. I mean, hearing from some of the governmental sources there, we haven't really heard yet that gas market liberalization is really on the cards, and they want private players to start importing LNG. But if that were to happen and that intention were to be there, in our view, this dynamics between pooled prices and market prices is something that will need to be clearly sorted out, because in the absence of that, it is difficult for private players to import directly and compete against those pooled prices.
Okay, so this one is about renewables competition with the LNG. So he asked, or she asked, that globally does inroads by renewables with tariff at less than 4% weight impact LNG global long-term demand curve?
Okay, I mean, see, definitely LNG demand will be impacted by renewables. So when we are saying that we see gas LNG demand growing in this region going forward, it doesn't mean that renewables aren't impacting the growth of LNG demand. If compared to the projections a few years back, obviously we think that there's a negative impact now, given renewables have become much more cheaper, and that means that they are being favored by several governments because they are also much more cleaner. But the reality of the day is that the incremental growth that is expected in many of these markets in the coming years, you are not just going to be able to create that massive investment scale of renewables to meet that demand. And that means that you will have to complement this renewable build with gas LNG sources over the coming decade. Post 2030, our view is that it starts to impact LNG demand into power strongly, because it's our view that renewables plus battery storage combination will start getting competitive, and that will make it more challenging for LNG to compete against those sources.